Welcome to Wilson's Weekly. I believe this is the 97th edition, guys. This is my debut, so very excited to be here with Doc today. So I've got some exciting things to give updates on in relation to interest rates remaining on hold, I believe, Doc. Jobs
yes,
and the labour
no surprise
market.
there. Yeah, and the labour market's still strong. So really, in all, it's good news. We all would like to see a cut to interest rates, but it does cause disruptions that can take some time to work their way through the system. Of course, we had a cut through the US, which was expected that they would perhaps have their first cut in some years, but not quite as expected the severity of the cut, which was down 0.5%. So, yeah, raised a few eyebrows, what the Fed did in the US, but they are in a different position to us, both in terms of where their interest rates are, even with that 0.5% cut, and where their inflation rate is. And dare I say it, they have got an election coming up, but we'll let that one go through to the keeper. Yeah, let's so we can talk about that. And of course, another strong month for our super strong labour market. So we'll have a look at that. And last weekend we had Super Saturday. Yes, it was the first Super Saturday of spring, which is the pre-grand finals, pre-school holidays, Saturday of auctions. Agents avoid the clash with the grand finals and school holidays, so we get a sort of a front-end loading with lots of auction activity occurring. So it was a big test for the market, which more or less stood up, really, but we'll have a look at that latest data. So, yes, episode 97, we've got the countdown to 100. So I hope we've got lots of celebrations coming up for the 100th in 3 weeks' time. But we'll await that with bated breath. So I guess we can start now and have a look at what's happened this week in property.
Perfect, mate.
So if we can get our presentation up, there we go, brilliant. So My Housing Market is my brand. We present the Wilson Weekly every week in conjunction with our friends at Infinity, and it is all about bringing you the latest information in regard to what's happening in the housing market, not just prices and rents, but also the economic situation, because of course that does influence things such as interest rates, which of course are very important to our housing markets. And we're really about the current state of housing market activity. So we want to inform our viewers and listeners just exactly what's happening here and now. And we do use a variety of data points to put together the jigsaw puzzle of what is actually happening in our housing market. So let's get started. It is the week to Wednesday, September 25th. So I think that means that it's 3 months till Christmas. So yeah, it's counting down now to the end of the year. Oh my God, can you believe that? But yes, it is the week to Wednesday, September the 25th. The big news this week, of course, was RBA interest rate decision for September. We also had the August labour market data from the ABS and the latest weekend auction results, which, as I mentioned before, cover the Spring Super Saturday. Well, the first Spring Super Saturday. We've got another one coming up in about 6 to 7 weeks' time, which is around about Melbourne Cup weekend or the weekend before. So it is a good signpost for what's happening in our auction markets. And of course, we look closely at auction results, weekend auction results, because they are a very good forward indicator of what's happening generally in our housing market. So let's get started. Another strong month for Australia's labour market. The unemployment rate was steady at 4.2%. We had another really big increase in jobs, up 47,000 over August, and that followed the 58,000 rise. That should be over July. So we've just had a remarkable increase in employment this year. Of course, a lot of that is migration coming into the system and being absorbed. But we've also had a rise in the number of unemployed until over recent months, until August, where we actually saw the number of unemployed falling by 10,000, and that helped us push up or keep the unemployment rate steady at 4.2%. The participation rate is important because that measures the proportion of the potential workforce that are actually working, and it's still at a record high, 67.1%. So we're taking the highest proportion we've ever had out of our potential workforce that are actually working. So it means that those that are coming into our into the workforce from the potential workforce, those that have been in small business, those that have been retired, there's enough work around now to act as an incentive for those, and that's why we have this very high participation rate, which really adds to the strength of our labour market, because not only are we using the highest proportion ever of our potential workforce in the workforce, but we're also creating thousands and thousands of new jobs every month. So and the unemployment numbers actually fell away. So good news. Western Australia, no surprise, still the lowest for the jobless rate, and of course, we're still continuing to see strong labour market results despite higher interest rates, which we have had until recently, and of course migration. So despite all those people coming into Australia, we are absorbing them, we're giving them jobs, and our unemployment rate is still low, holding steady. So it does reflect just how strong our economy is. And look, it's good news, of course, for those that are in the workforce or looking for work. But the Reserve Bank are looking at this a little sideways, because it does mean still a shortage of labour out there. It does mean that employers are still competing vigorously for workers, and it means that to secure more workers, typically employers, because we're not seeing the productivity gains that we usually see, have to pay for those extra workers with higher wages, to encourage them with higher wages, which they then are forced to push up prices. And of course, that means higher inflation. So it's the Reserve Bank, of course, part of its brief is to have full employment. We've got that. But it still means in these circumstances that it's putting upward pressure on prices, which means higher inflation. And we don't want that at the moment, because we're trying to get our interest rates back to, or we're trying to get inflation back to the target range, so we could have some sense perhaps of easing interest rates, which still remain quite low. Okay, so there's the chart for our unemployment cycle, 4.2%, just flattening out over recent months after rising from those ridiculous low threes we had a year ago. Can you believe, which were the lowest unemployment rates we'd had since the early 70s, which was a completely different Australia regardless. But even with 4.2% at the moment, you can see there that it's actually still below where it was during the previous mining boom in 2011-12, where we had a very strong economy as well. And our unemployment rate troughed then at 4.9%. And even it's not that far ahead of when we go back to the great mining boom of the late 2000s, where the unemployment rate was 4%, and that was a massive economic boom. So it's still a low unemployment rate, still reflects strong economic conditions generally. When we look at compare the states over August, as I mentioned before, Western Australia still the lowest, 3.8%. All the states are sort of pretty well there in the low fours, with the exception of Victoria. We know that Victoria's had some challenges in terms of its economic performance, particularly post what was a very severe lockdown period in Melbourne. But still, nonetheless, that's a good result, 4.5%. But you can see there that every state is tracking higher now than where they were a year ago. Been a big rise in New South Wales, up from 3.3%, which was crazy low, to 4%. But it's still a good result there for New South Wales. Queensland's been the steadiest. Queensland and South Australia, the steadiest there, just up 0.1% over the year. Still quite low, of course. And Western Australia still in the threes. And a lot of that economic strength in Western Australia is helping to continue that Perth housing market boom, which is just going on and on and on. So, but look, good conditions here in the labour market means that there's a a lot of confidence around, of course, as there should be, and that's a positive for housing market activity when you're not worried about losing your job, and also that you're pretty happy about the prospects of getting a wage increase, although the real strength of wage increases, I think, is behind us, but we're still competing for a shortage of labour out there, which means that workers still have a little bit of the whip hand when it comes to negotiating their terms and conditions with their employers. So once again, another good month for the economy. No signs that interest rates, those high interest rates or higher interest rates, have had a significant effect on the jobs market. So yes, we had our September meeting for the RBA. It's a changed environment this year. We've got fewer meetings from the RBA. They're sort of going early one month, late the next month, then a pause. We had a pause over August, so this is the September results. A pause over July, sorry, and then early August and now later September. But on hold, and that was expected by most. That's the 7th consecutive steady decision by the RBA. As we've seen before, the economy is still strong despite those 13 rate rises since May 2022. And jobless rate, as we've described in detail, remains low. Jobs are surging. The number of jobless fell over the latest month, and we have a record participation rate. Retail sales are still high. They remain significantly above pre-COVID levels, notwithstanding all that migration and inflation, which acts to push up the value of retail sales. But notwithstanding that, we're still tracking quite strongly. So people are spending, and why wouldn't they spend when their wages are rising and they're feeling pretty good about their job security at the moment? The latest inflation data, the monthly inflation data over July, was very positive for a change. After a few months of inflation rising, we actually saw inflation fall away. Both headline inflation and underlying inflation was lower over July, and that was a product specifically of lower fuel costs. And as we've discussed at length here, there's been a very strong relationship between fuel prices and the inflation rate, as you would expect, and we have seen some relief in fuel prices over the last 2 months, and that's worked its way into a lower inflation rate. In fact, we started to see the price, the US dollar per barrel price of oil fall below $70 US. It's picked up a little bit over the last few days, maybe because there's a lot of concerning activity in the Middle East now. I think that's working its way into some negative sentiment in terms of the supply of oil. Fingers crossed that doesn't worsen, but things are not looking too good there. And of course, if we do get higher oil prices, it will likely work its way, well, it will work its way back into higher inflation. The other main driver of inflation has been housing costs. A little bit of a break over the last inflation data with housing costs, but there's still not a lot of relief in sight, although we are seeing slightly better outcomes, particularly for tenants in the rental market, but still some way to go there before we can really start to get put a cap on what's been, almost out of control housing costs due to higher rents and house building costs. So better news with the monthly data for inflation. The headline rate was significantly lower. The underlying rate, which takes out the volatile elements of the model, was also better. And it's the underlying rate that the Reserve Bank focuses on. Now, that was better, but we're still at 3.7% underlying inflation, which is still well above the 2 to 3% target range that the RBA has. And look, the RBA still, we'll look at the comments from the governor, is still a bit negative in terms of the outlook for inflation. Our inflation rate is well ahead of the US inflation rate, which is about 2.3%. Their target's 2%. So even though their interest rates have fallen 0.5%, they are now at 5%, but they're well above our 4.3%. So it really doesn't have a lot of implications for Australia's results for interest rate policy what happened in the US. But the Reserve Bank governor has clearly said that, yeah, it looks at the monthly results for inflation, but it's more focused on the quarterly results because that's a more rigorous model. So the next quarterly results are the September quarter, and that won't come out until after the November meeting, which is the next meeting for the Reserve Bank. The monthly stuff, yeah, looks okay after a couple of, bad months with bad in terms of higher inflation. But they have quite clearly said that they'll be looking at the quarterly data. So we need to keep a really careful eye on what happens over the month, of course. But it is the quarterly data that is important. And the Reserve Bank has said quite clearly that it doesn't just need to get like 2-3% at 3%. It wants to be between 2 and 3% for a concerted period. So not like one quarters of data. It wants to have a period where they can be certain that inflation has been beaten and that it's back in that between 2 and 3%. So it'd be looking for a mid-range result, in that target range, 2.5%, before it considered that it got inflation under control. So given when, they have said clearly they're looking at the quarterly data, I think that rules out any change this year. I don't think we're going to get to that, in a concerted period in that, mid 2 to 3% range until at least the first or even second quarter of next year. And that sort of validates what the board said in its commentary. It said that headline inflation will decline for a time, which we've seen, particularly with falling oil prices. And also another factor is the government's handouts for energy bills, for electricity bills. That will also have an impact on the inflation rate. So it's saying for a time, because that'll obviously wash its way through the system. It's a one-off. We need to watch oil, because if that breaks out again with Middle East issues driving a higher oil price, then that will push up inflation. But they say that underlying inflation is more indicative of inflation momentum. So they look at that result anyway. But they clearly say it's too high. Underlying inflation is still too high. And they think it'll be some time yet before they're in the target range. In fact, they're talking 2026 before they get sustainably in the target range. So again, that tells us, unless there's a real outbreak in inflation, which would mean higher rates, and they're not ruling that out, that the most likely outcome, fingers crossed on the Middle East issues, that we'll see rates remaining on hold for some time. But having said all that, they are very vigilant to the upside risks to inflation. So they recognise there's plenty of potential for upside for higher inflation, and they're aware of that, and they're not ruling anything in or out. So that means, if those risks eventuate with higher inflation, that they're likely to raise interest rate because they need to get inflation under control. So I think, all things being equal, which they never are, we're in for a period, even if we had a reasonable outcome for oil, a period of steady interest rates. And, at the end of the day, that's a good thing for certainty and predictability if we do get interest rates remaining around about where they are. I know people want some relief. People out there, some of them are doing it tough, and lower interest rates would help, but it does cause repercussions down the track. And the last thing you want is interest rates to go down prematurely and then have to rise again because inflation breaks out. So there's the chart for the RBA's cash rate. You can see there that it's now peaked in terms of the cycle, but our official cash rate is still below where it was back in that very strong mining boom period in 2011-12. So it's actually lower by, the best part of 0.5% than where it was in that previous peak of the cycle back in 2012. And, maybe these rates are still a little low, and that's why we haven't got in a relative sense why we haven't got inflation under control as we should have done. Maybe the Reserve Bank should have raised interest rates a bit more last year, but we've got a new governor, a new system there now, and I think they're a bit more aware of the need to be proactive in terms of controlling inflation. But as I said, I think the outlook is for steady interest rates going forward, and I think that's a positive, particularly for the housing market, because lower interest rates would just drive more demand in the short term, which would end up with the likelihood of another disruption to creating another cycle, and with issues of affordability as a central part of that. But nonetheless, as I said, we're all, I guess, mortgage holders particularly, would welcome lower interest rates. So let's have a look. That's our economic news for the week. Interesting stuff. Strong labour market continuing, and certainly still a very tough outlook from the Reserve Bank in regard to whether or not they've got inflation under control. They're saying they haven't. Well, they're not confident that they're heading quickly to the target range, and I think the outcome for that will be, particularly since they're focusing on quarterly data sets, won't be well until next year that we see, if we get some relief from inflation, lower interest rates. So Super Saturday last weekend, and it was a Super Saturday, lots of auctions. That's what happens. Agents bring forward their listings because they don't want to have the clash with the football grand finals, and also holidays have started, school holidays are starting, and the week after next is a public holiday in New South Wales. So that's why we always get this big weekend of auctions. We call it Super Saturday. I think I was the first to actually use that phrase some years ago. So I should have put some sort of a copyright on it, but that's another story. Anyway, even though we did get the usual big numbers of auctions, I think results were generally positive, given that it was going to test buyer depth with all these extra properties on offer, and more competition amongst sellers, and more choice amongst buyers. And I think the outcomes were reasonably positive in most of the capital cities. So next weekend we're in snooze mode. There'll be certainly a significant drop away in auction numbers, particularly in Melbourne, which of course is completely obsessed with the AFL Grand Final. It even has a public holiday coming up on Friday to celebrate that. And you'll only see a handful of auctions on the Saturday in Melbourne, and they'll be down also in the other capital cities as well. So let's have a look at the results. 1,004 auctions in Sydney, big number of auctions. Another 100 more auctions compared to the previous weekend. The clearance rate was actually higher, but it's been around about 70% in Sydney for a while now. And 70% is still a good result for sellers. 7 out of 10 properties clearing under the hammer on the weekend. But you can see once again the same old story. When we compare it to a year ago, auction numbers significantly higher than a year ago. This year's been a big year for sellers, as usually happens at the back end of the cycle. Sellers come into the market. We've seen that quite clearly. Auction results validate that. Nearly 200 more auctions in Sydney last weekend compared to the same weekend last year. But the clearance rate, still down, because it was still a very strong market in Sydney a year ago, but not too bad there, that 70% clearance rate. And, up a touch from the weekend before. So quite a steady result. And I think a positive result there, considering all those extra auctions, that we actually had a higher clearance rate in Sydney. Well, Melbourne had a booming auction market in terms of auction numbers. 1,282 auctions in Melbourne. That was well over 100 compared to the previous weekend. Way ahead of where it was the same weekend a year ago. That's quite extraordinary. Clearance rate down slightly from the weekend before, 63.1%. A little bit on the skinny side, that clearance rate, but given all the extra auction numbers, you would expect that to have accounted for a couple of percentage points, but still not performing as well, particularly as that Sydney market has been. Even though its clearance rate is a little closer to where it was a year ago, it's still a market that's in a sense treading water, that Melbourne market. We've been waiting for some signs of a breakout but nothing really there yet, although still reasonable results. Brisbane, a little bit lower in terms of their auction numbers. Clearance rate higher, back to where we would expect Brisbane to be, given a couple of weaker or strangely weaker weekends in Brisbane. But once again, their listing numbers are well ahead of where they were a year ago. Adelaide, big numbers of auctions, pre-grand final auctions, AFL grand final auctions in Adelaide, 145 auctions, and a good result there in Adelaide, 83%. So again, Adelaide reinforcing itself as the strongest auction market, capital city auction market. Again, listings massively ahead of where they were a year ago. Similar auction numbers in Canberra and a similar clearance rate in Canberra as well. So that Canberra market, a little bit of a tease at the moment. We've been waiting for a revival there, but it's still a bit 2 steps forward, 1 step back in that Canberra market. But we await results over coming weekends. Just looking at the trends, Sydney holding there in the mid-70s, where it's basically been for most of the year. So quite a steady environment in Sydney. We're going to be releasing the September house prices at the end of this week. Of course, we're coming up to October. We'll release it on the weekend. And you'll see there that similar to the auction clearance rate, Sydney house prices and unit prices have been steady as well over the month. So Melbourne, a little bit lower, but still in those mid-60s, again, consolidating where it's been over the past 6 months in that mid-60 range. Brisbane's picked up after 2 really weak weekends for Brisbane. And as we saw on the weekend, they were back up into the mid-50s. Again, we await what will happen over the next few weekends to see if that consolidates. Adelaide continues to strengthen after a weaker period at the end of autumn into early winter. But again, very strong results there, near 80% clearance rate, very strong results there for sellers. And Canberra, after looking like it was going to head into the 60%, has fallen away a little bit this month, although some better results at the weekend. If you're looking for those auction clearance rates, you can get them on my LinkedIn site, which is Doc Andrew Wilson at LinkedIn. Around about 6:30 every Saturday night, you get the headline results of each capital city, which looks at the clearance rates, the number of auctions on the day, and compares it to the previous weekend and the same weekend last year. If you're looking for the full national report, that's released also on my LinkedIn site on Sundays, and that includes the regional breakdowns for Sydney and Melbourne and the top 10 sales for each of the capital cities under the hammer on the Saturday. If you've missed that, there's a QR code where you can get a link to a PDF file on that latest for the latest national auction market report, capital city auction market report. So if you take a pic of that, it'll give you a link to that report. Just finishing off with our little ad for the My Housing Market Infinity Suburb Data app. If you're looking for the latest data on a suburb basis for all of our for all the suburbs in Australia that have data, these are asking prices and asking rents. This is a great little app. It really gives you a fantastic real-time insight into the housing market. So if you're wanting to know what prices are being asked for, what rents are being asked for, and the sort of energy in the markets, that's the app for you. And it sits quite nicely on your phone, computer, or on your computer. There's a screenshot. We've used Blacktown as an example. You filter that for price or rent. You can filter it for the state area, the regional state area, or for the capital city area. We also can break that down into houses, units, and townhouses. Also, the number of beds you can filter it for. So here we've got Blacktown with a 5-bed house, and it not only gives you the median asking price, it also gives you the high and the low, so you know the range, and also the number of properties that are currently listed for sale. And we have the same thing for the rental market. So a very handy little tool, and it is updated daily. So it's all the latest results there for all the suburbs in Australia that actually have data. Next week, as I mentioned, September house and unit prices. Interesting to see how we're going with that. Do we still have the big three as the big three? That's Adelaide, Perth, and Brisbane, that have been just tear-away leaders in house price growth over the last 12 months, 18 months, 2 years. Very strong conditions. We also will get the August inflation rate, which is coming out this Friday. So we've discussed inflation and interest rates today. So let's see how that latest inflation rate data pans out, because that will be certainly another signpost to where the Reserve Bank will go. Although, as I've mentioned, they're really looking at the quarterly data, but this all adds to the picture. And of course, we'll have the latest weekend auction results post Super Saturday. So there's not going to be a lot of data around because everybody's distracted, holidays, football finals, you name it. But nonetheless, it's handy to compare it to what happened the year before. If you're looking for the download of this week's podcast in terms of presentation, there is the QR code for that. So you can get a hold of that as well as a replay of the podcast. So it's been great talking to you again this weekend. We're counting down for 100. We're counting down for 100 episodes, which will come up in 3 weeks' time. So it'll be a big party for that, I'm absolutely sure. If you are enjoying a bit of a break at the moment, enjoy your break, enjoy the football finals or whatever it is that is distracting you. But we'll be back next week with all the latest news on the housing market. So thanks very much for your attention.
Thanks, guys. Thanks, Doc. Much appreciated for your time, mate. And we'll be sure to roll out the red carpet in 3 weeks' time.
Yeah, that sounds good. I look forward to it. Good on you guys. Thank you.
Thanks for your time.